Good morning, traders. Paul here with GammaEdge. Today is Monday, the 18th of July. Let's get started. This is the fine print. Ask that you pause your player, read this. It's important to you. It's important to us. If you agree, hit the play button. The market model, we've got several, as you guys know, various versions of the cumulative tick, but we do utilize the cumulative tick as a short-term and long-term indicator. Got an annotated series here. The bottom line is that Thursday and Friday saw a reversal and a confirmation of a move long into the markets. Certainly this linear up pattern that you see here and what we call railroad tracks here is bullish in the short term. A lot of movement, of course, in the day. And when we see a rapid movement like this, we always want to be cognizant of a potential failure at the top here. We'll have to wait and see what happens. Stalling, consolidation, whatever you want to call it. Also want to note that this pattern that I've highlighted here in yellow is not necessarily constructive to the long-term bulls. It's obviously we've been back and forth on the failure of the signals. But nevertheless, this is a very good model. We've back tested it extensively. It is the second strongest and most profitable setup that we have right now. Makes a huge difference in your trading, whether you should be long or short during this this type of structure. So given this and knowing that every swing trade begins with a day trade and every position trade is emerging from a swing trade, I would be looking very seriously at some trial balloons long into the market, and if they pan out, you can keep adding to them. When we take a look at the index conditions from a gamma perspective, these are called the wing charts, and the wing charts here show the net cumulative negative gamma and the net positive cumulative gamma here in red and green. And we've had a reduction in the net negative and an increase in the net positive across the board for the SPX, the SPY, the Qs, and the IWM. The horizontal, or not horizontal, the downward sloping line here still shows that we have a dominance on the net negative side of the equation, but it is improving. I will highlight that the IWM, which has been broken for months, remains broken. Not a lot of upside demand in the small caps. But the Qs are looking pretty strong, going backwards here and looking at the SPY, looks pretty strong. Looks like it's improving compared to the previous day. And then here the SPX looks like the same thing. So keep an eye on this. Very, very interesting setups. A failure here, an addition of puts, for instance, and a reduction of calls would be a signal of a reversal. We're not seeing that, so we'll have to watch. And you can view these in real time within the Discord. Excuse me. Taking a look at the volatility, we are seeing the put side of the VIX being added to relative to the previous day, and we're seeing the calls being reduced. A couple things to note here, though. When we take a look at the OI change, we're seeing a huge amount of calls going out for September, October, and November for the monthlies out there. Pay attention to that. The magnitudes are striking. These are abnormal magnitudes. We have a lot going in for a latter part of Q3, Q4, and something to be attentive to. This being said, puts are being closed in those areas. And also this week's puts are being closed, but note the magnitude change. Very, very different presentation here, and you can see the distribution of those strikes. So pay attention to this. Some longer term trades are going in on the VIX. They could be selling, for instance, the shorter term strikes and using that to fund the out of the money calls that we're seeing here. So think about those strategies and think about how you could potentially do those risk-free. Adding a new series of charts here. We added these over the weekend in the Discord. Right now these are manually generated. We'll work on getting them auto-generated for you. But the key takeaway here, you're looking at the true delta and true gamma level history. And effectively what you're looking at is the price invariant type of gamma and delta distributions for each of the SPX complexes. We have a combo which is comprised of the AM and the PM combination. We have only the AM settled, which are the monthlies, and then we have the PM settled, which are the dailies as well as the quarterlies. And a couple things are very striking. First of all, downtrend on the zeros, and until we start seeing this reverse up, we have no confidence of going long across the board. You can see that the PM is a little tighter in context of the gamma and the delta zeros. Not as much here on the institutionals. In the institutionals, I think the takeaway for you is that the institutionals are banking on lower prices ahead, or they're just well hedging themselves ahead in the calendar. So pay attention to this. The price trend is still down as far as the TGZ and TDZ are concerned, and despite the blue line, which is spot price, possibly bumping up against these levels, just note that it's like a rubber band. It's getting stretched when it pushes above these levels and is likely to get pulled back. We'll just have to see. Your crystal ball is as good as ours. Taking a look at the SPX structure, got some annotations here. Pause your players. The key thing to pay attention to is that we've got the JPM long puts here at 39.10, the potential stalling area. You're also going to see some 39.20, 39.25 areas here coming up in a couple slides. Also note that this 4,000 strike level is still very, very large. Up here at 4,005, not shown, is the September expiries for JPM. That also is dominating, and you'll see that here. To the downside, you can see we've got these zeros concentrated just below spot price. Why that's a big deal is that this is a pressureless area in our opinion, and as a result, the zero DTE and other market news cycles will have a greater influence than if we start moving up. As we cross this 39.10 area, note moneyness starts changing, deltas start changing, and as we get closer to the end of the month, the magnitude of those changes are going to be fairly significant. The convexity of the gamma will rear its head. Taking a look at the levels here for today, over here on the left is the PM settled complex, and you can see that JPM strike sitting here. You can also see that we've got COI sitting out at 4,000 for the PM settled. Over here on the combo, you can see that it's plus GEX, COI, and POI. Very striking, very strong levels that you can see here, and we think that is material. Also want to call out the slight reduction in the expected move for today. Still fairly significant, but not nearly what we've been seeing over the past couple of weeks. Here in the PM settled, got the notes in the PBI channel in the Discord, but the key takeaway here is that we've got this coincidence pattern setting up for negative gamma right here at 3840, 3845. This is on the entire complex. You can see the JPM up here. You can see some other hiding areas. Just pay attention to these key levels that you see here. This is not the expiry. This is the full PM complex. The zero DTE, you can see that same transitional area here. You can see the distributions. The key takeaways here is that very little pressure above 39.25, and we think that is material. And you can see to the downside what we look like in the zero DTE. Looking at the combo complex, still very negative. You can see a lot going on up here. I want to call your eye here. This was over 100 billion net negative notional in deltas on Friday. With the expiry on Friday, we had a lot roll off, over 50,000 puts vaporized, and we had the net negative delta go from that minus 100 billion level to this now almost minus 42 billion. This is getting within range for the dealers to be able to absorb, so pay attention to that as we go through the week. We need to see this reduce further, but note COI and POI are still sitting up here, very dominant level. Pay attention to this 4,000 level. We've got some transitional areas highlighted here by circle 1, circle 2, and then here's that same transitional area that I was talking about. Also to the downside where we have net negative gamma, fairly significant magnitudes coming down, and you can see where we are in the quarter and half strikes as we come on down where the potential pause points are. Taking a look at the overall SPX structure, a lot of notes in here. I would pause your player and review these. Couple key things is that we're seeing the emergence of multiple peaks here, so we see calls going in and out in time, and that's given rise to the different gamma levels that you see here. We closed right here. We've still got some, we're at the base of the transition area. We haven't been able to break out of that base of the transition area. We need to see this push north, the 3900, 3910, which is probably where we're going to open today. Is going to be a very, very sticky area, so we're going to want to see how this transition resolves today in the 0 DTE. To the downside, we're seeing actually an emergence down here of 3600, nothing at 35. 37 is still the dominant downside, but note the levels are getting less. Part of that is due to us moving up, but also part of it is the closure of puts down here, and you can see this distribution compared to this distribution is somewhat problematic. It's asymmetric. We don't like seeing that asymmetric behavior. We also don't like to see a reduction in the put sides. It does indicate to a certain extent that people are not necessarily protecting for the downside, and certainly the lines in the sand, 38, 37, 36, if we were to lose any of these, you can see very rapidly liquidity vaporizes, and an illiquid market is what collapses. So the summary for today: market model short-term bullish, longer-term bearish. So you can play the upside opportunistically, but we would advise that you paper trade some downside insurance. Remember, buy insurance when you don't need it. That's always a very good thing. The wing charts are short-term bullish and improving, but are still quite dominant on the put side. So be aware of that. We're coming out of this area where puts have dominated. Again, play that opportunistically. The back tests of this structure is actually fairly good on the short-term long side, so you want to look at the liquidity stocks and high volume stocks or high OI stocks that are potential candidates here. Zeros of the complex are still trending downward. This is confirmed by the market model. Since we have that structure, we are still longer term downward, and we think some of the indications on the AM settled SPX indicate that we are going to go lower. That being said, the 4,000 strike may be within reach if we continue to see the calls being added out and up. We're going to have to pay attention to that throughout the week. So that's it for today. Join us at GammaEdge.us. That'll take you to a sign-up page for the Discord. Once in the Discord, you'll have 14 days to kick all the tires of the tools we have, learn how to apply this to your trading styles, and look at the commentary from some really great traders, as well as from the mods. Follow us on Twitter at GammaEdges with an S, please. And then here on YouTube, if you like today's content, smash that like button and follow us so the next time we post something, you can be notified. Well, with that, bid you farewell. Make it a great week. Hope to see you here. Hope to see you in the Discord. And of course, if you have any questions or comments, don't hesitate to join us and post those questions so we can get them answered for you. Make it a great one, guys.